interrupt. I said 2 minutes. Can you just wait for one more minute, please? Can you start from the start? I'm sorry. Thank you. Start exactly after 1 minute from now. Thank you so much.
Yeah, okay. A very good evening, everyone. Hope you all are safe and doing well. We are back with a new Fresh Talk this weekend. Thank you all for enrolling in this event. Excel in Excel welcomes you all. Let me give you a gist about Excel in Excel. Excel in Excel is a data analytics firm that solves high impact business problems using data and technology. We provide end to end services in the field of data analytics and data visualization. Our core services include analytics, consulting, and training. Excel in Excel presents the popular talk show EIE Fresh Talk on its YouTube channel, where it hosts great leaders and subject matter experts in various fields from India and abroad to speak regularly on a variety of topics ranging from Excel to analytics and finance to financial modeling and many more. Few of our past events are Maximizing Business Potential by Sangeeta Sumesh and Analyzing Data with Power BI by Amit Chandak. Today's talk is about business analytics, what, why, and how, presented by Mr. Venkatesan. Mr. Venkatesan is a qualified chartered accountant from ICAI along with CISA qualification, specialized in the areas of internal control and data analytics. He is a freelance trainer serving both the corporate and the student community in the area of information assurance. He is a visiting faculty for the Auditors General Office, Chennai, and the Institute of Chartered Accountants of India. He holds certifications on data analytics from Microsoft, Udacity, Manipal ProLearn, and Educare. We welcome you, sir. Before we begin, I request participants to join me in welcoming today's speaker with a hi in the chat section. If you have any questions during the presentation, please type them into the question box. We will later present it to the speaker. Over to you, sir.
Uh, Thanks, Excel and Excel, for this wonderful opportunity, and it's an extreme pleasure in connecting to everyone uh, from my client office uh, to discuss on analytics and especially on business analytics. So over the 1.5 hours, we are going to discuss about what is business analytics or analytics all about, what it intakes, and what kind of benefits that it can drive to an organization. And what is a key in any business analytics engagement, or even if it is a function inside an organization, what it takes to give a good business analytics output, and how it can take the management of it. So thanks for that time, and with this small intro, we'll go to the session. So So this is what we're going to see this whole session. Data analytics and intro, a critical use case, types of data analytics, how it can impact organization, and how it can help other functions. What are some common tools? What can be start? This is how and the topic of why, what, is actually all these so at the end of the is how what by this particular system. So I use particular definition of analytics while there are definitions and business analytics. This while there are a lot of definitions which I still use this definition and this covers what analytics do, starting from a very small engagement to a biggest of a big data engagement. So data analytics is data. And mathematical models help managers gain improved insights about their business operation, make better fact-based decision. So this covers almost everything that you can do under data ambit. So where you start with the very smallest engagement where you want to understand how many sales or start with simple recoverability on how many every what the contribution from simplest analytics, from the simplest observation, an overall study of let us say going to analyze the let us say a graphical image to understand whether it is a changed image or a normal. Yeah.
Venkat, sorry to interrupt. Voice is not clear, Venkat.
Is
There's
it?
some comments from YouTube that voice is not clear.
Oh, is it? One second. I'll just check here.
Just a suggestion, can you just start from beginning so that members can follow you, Venkat?
I hope now it is fine. So
yeah, it is better now.
Okay.
Thank you, Venkat.
Okay.
There's some disturbance coming up, Venkat, from your end.
Now might be because I've checked the camera well. The mute well. Now check for the next 5 minutes. If it is there, I'll change the internet again. Okay. So we started with having an introduction about data analytics and what it takes to do a business analytics. Coming well. Starting from the small fundamentals that happen today in an organization to overall level on takes or so it's covered rarely all that we hold very covered. What it is the line of use testing whatever and use statistical analysis and predictability when you start trying to understand the correlation between two aspects and whatnot. Information technology is starting from very smallest Excel spreadsheet that you use as to an image software that is determined by a particular software based on the image of whether it is a original image or it's a part of the need to know in terms of already existing models that work on the field of data sciences. So analytics, this definition of analytics is by far one of the most covered definition, and it enters this is
Sir,
what data. Yeah.
sorry for the interruption, sir, but your voice is again breaking.
Oh my God! Once again. Give me a moment. Now fine. I'll do for 5 minutes, then we will see again. I think it'll be fine. So, we were on this definition of data where it undertakes everything under the ambit, includes data, technology, statistics, quantitative methods, existing models that work with data, including search models and etc. And what is the objective of this? You use all of this to get some insights that will improve the business operation. So, because now, if you see anything and everything that is not connected to business, that doesn't get converted into any benefit that business drives upon, that particular analysis, however wonderful it is, might not be effective for an organization to implement. So you start with a very smallest organization to one of the biggest top Fortune 500 companies. Everyone wants better decision. Everyone wants to improve their operations. Everyone wants to optimize their resources. Everyone wants to improve their wealth. So that is the overall aim. So these tools, these parameters actually help the organization, this analytics as an exercise, help using all this particular uh, resources and help managers to make better decisions, which are facts based and which improves and which demonstrates value to the organization by basis of improvement in wealth, reduction in time, existing or good utilization of optimization. So this is what is analytics all about. So who is an analyst? Anyone, data analyst or scientist is going to someone who is going to practice analytics and bring these insights into the organization. So in some cases it could be an internal resource, some case it could be an outsider. So anyone who uses business analysis as an activity is a business analyst. And anything that is not directly related to a business is not going to add value to the business. So business analytics per se is taking up a business problem and applying analytics to it and giving insights to the managers, to the top management, to the middle management, senior management, and ensure that it helps them by increasing their wealth, increasing their value, or optimizing their resources, whatnot. So now we will use a case study that we did for an organization and try to bring this topic on to why, how, and what. So just to give an intro, we started with a client who's having a 100 crore operation who's into point of sale machine selling and
Are you
deployment.
sharing the screen, Venkat? We are not able to see any else screen.
You are
Screen
not.
sharing.
It's there. It's already on.
Now only it is. Yeah. Now we are able to see. Thank you.
So this was a company. We started. This company is in deployment and fair price shops across the country. And it approached an objective of improving their margins and the question of our topic. Why and how? So we'll say what and the question of what is the business problem. As long as we're trying to solve a business problem, analytics, engagement, or activity problem are we addressing upon? And if we're not addressing this problem, however great output, however great analytics, we benefit to the organization because what is going to be. So the first and foremost, what is a business challenge? So if we start putting our business analytic engagement, if we are going to start any business analytic activity, how we start an engagement or how we start any work, ask this question first. What is the problem are we trying to solve? This problem can be the first which can be solved. Now, first question in front of the client that he asked us, can you help us to improve broader? Now, this broader like do something and bring benefit. Here, the problem is not defined. So what?
Sorry, Venkat. Hello.
Hello. Yeah.
Venkat, still members in the YouTube are mentioning they're not able to hear you clearly. Are you using any mic or is the internet issue at your end?
No, I think I'm using the mic, but I'm just taking the mic now. Just hear me out for a few minutes.
I have sent you the screenshot what members are,
okay, I'll use the mic. I have changed the mic now. Let us see how it goes now. Otherwise, we'll again check it out. Okay. So I was using the mic, but I positioned it better. Just check now. Now is it okay for you?
Without mic, it is okay, but in between we get a disturbance. So can you use without mic? Is it fine or without mic will it?
Now is it good?
Yeah, it is good. Little louder. Yeah, fine. It is good now. So there's no disturbance now.
Now is it good?
Yeah, it is good. Little louder. You continue. You continue the show. Thank you, Venkat. Sorry for troubling you. Bye.
No, nothing like that, sir. I hope now it is okay. So now what happens is that here the question in front of us is first the problem in front of the client. So we are talking about what is business and analytics all about. So the first question is, what is the business challenge you are trying to solve? Is it a bottleneck that we are trying to remove, or is it an improvement that we are trying to bring? So that answer we don't know now. We have to do an analytics to get that answer. But first, we are trying to have a question in front of us. So the client says the question in front of us is, I want to evaluate and improve the margins or fix revenue leakages. Now, this is a very broader term. So this can be whether it involves an analytics exercise to solve this question is the first one. So there are two approaches generally on any analytics engagement. One is called a top to bottom approach. The other is called bottom to top approach. Here for this client, we were forced to do a bottom to top approach. That is, he said what is his objective. He gave us an overall problem, which is something that every industry, every businesses are going to face. Every business want to improve their margins. Every business want to reduce their leakages, obviously. But is this particular problem, can it be trickle down to the next effort? So before even I start trying to sit with my own tools to analyze this data or to extract this data or information, we're going to ask further questions in terms of what this particular holistic question can be segregated. So now, are we going to look at is sales or revenue? Or are we going to look at is cost? So now if you're going to decide, we're going to look at both. First, I will start with somewhere. Either I'm going to start with sales or I'm going to start with cost. Let us say I'm going to start with, in this exercise, we started with sales, cost. So we decided, okay, we are going to start with cost. So the next exercise that we are going to question upon is, what are the components of his cost? How data can help him out on that particular point. So the data is one of the very smallest information, including a number of people employed in an organization, versus how many missions are there in his organization, how many trips that someone has to take, what is the business problem. It could be anything. The data is like, it's as infinite as it can be. So we are going to now start the first question into a sub question where he wanted to improve his margins, he wanted to reduce his leakages or cost. So now the next question is, we are now going to focus only on cost for a while. Now the next question, what are the costs that is involved? Okay, then we started, okay, let us start with human resource cost. This is a bottom to top approach where he has not defined his problem. He says his problem is generic. Predominant of the clients or predominant of the businesses are going to come out with a business analytic engagement like that. They are not defined their problem yet. Okay, so the problem is something that we might have to figure out as a part of business analytics engagement. There's one more case study that I'm going to present to you where we have defined what is the problem per se. So they have defined my problem is X. Now, can you tell me using data, can you improve this problem? I mean, can you improve my success rate from this problem? Can you mitigate this problem? So that is the next question that they are going to ask us. So there it is a top to bottom approach where I have the problem definition started. So the question of why business analytics is done. What is going to do is done. And the why business analytics, what are we going to do? That is defined. But here it is not defined. Here we have given an overall ambit. So we started asking further more questions and decided, okay, I am going to focus on cost. And the next we decided is, we defined the business challenge here. The business challenge was not something the client defined, because either the business challenge or the bottleneck or the business problem, most of the time the client is not going to define it for us, or the business is not going to define for us. If you are working inside an organization as a data analyst and you are trying to solve a problem internally, the team to which you are going to present the report or help upon are not going to tell us what is their business challenge is all about. They are going to give a very generic question. In general, that's what I've seen in my experience. But you also get certain clients where they have identified their problem. They want you to help them out with data. Next, as a business challenge, what we started is the company is bound to ensure the availability of the devices at 99% of the operation time, which means that, let us say there is one particular fair price shop that is in some village and they have already supplied this particular device there. The responsibility of this guy includes that device is working at that village. So if they are operating at 7 states, now the responsibility of this guy is to ensure that this particular shop is up. There is no problem with that. That mission is up when they want to do a sale. So this is a big requirement, because it is ensuring that the mission is not operated by me. The mission is operated by someone else, but the maintenance of it and the uptime of it is my responsibility. So to cater that responsibility, the organization actually had field engineers across all regions to ensure that if there is any problem with any of the devices, these field engineers can go and ensure that this particular device is up and there is no problem with the device. If there is a problem, replace it immediately. If there is a small problem, try to solve it. That was the KRA of field engineers. This particular statement, this particular know-how of what is happening out came when we do a diagnostic study on a client. So first, in any business analytics engagement, in business analytics point, we start with what is a business problem. Next, after we know what is a business problem, we have to have a complete understanding of what data this particular business problem needs, what is a process inside my business, what is a process inside the business towards this particular component which I am trying to help them out. So if you are talking about revenue related analytics, then it involves understanding what kind of revenue they make, where they make the revenue, how a sale happens, etc. If you're looking at a cost, then it involves what are the costs involved. This is not per se a data problem. This will not per se be, predominantly when we present this problem to our own people who are into data but not aligned to the business, they are feeling that this might not be my job. They feel that, okay, you give me the data, I have my own tool, I will apply upon it and give you results. But before even we start that step, we need to understand what this data mean. So for that, we need to have an understanding of how this particular business segment operates. So we might have to have a segregation of someone in our team who is a business guy and who is a data guy. So our responsibility is to ensure that this business and data go hand in hand. Any data that is having no understanding or that is having a less understanding of business might not help the business. And any business that has data in it but not giving a meaningful result or analyzes it and gives a perspective out of it is not going to use or harness the data. So we are trying to solve that problem. There are two terms here, business and analytics. So here business is includes understanding of this particular problem. So now what happened is this field engineers has to reach all these fire price shops and attempt to repair the devices in case of small difficulty. And if it is of big difficulty, then they have to send it to our own center for repair. So which means that for every fair price shop or every 5 fair price shops, you might have to put 1 field engineers depending on their lookout. So how many field engineers are involved, how many people are involved. So this becomes a huge manpower cost. So what we did, we started putting our mind on this particular item. So what we started, he wanted to reduce cost. We were in cost. Then cost, we started with human resource cost. And on human resource cost, we started with field engineer cost. So here, when the client came to us, he never asked us, is my field engineers are adequate? Or is my field engineers are more? That was not the problem statement at all. The problem statement is something that we construed after having a detailed analysis or a diagnostic of client businesses and client processes and client numbers. So the business problem is defined at the state. Is my field engineers are adequate, inadequate, or more? That was my problem statement. So why analytics? The question here is to understand whether the field engineers are inadequate or adequate. Is this problem relevant? Yes, because if they are inadequate, my output is going to be a problem and I might have penalties, I might have problems with my customers. If my field engineers are more, then I am trying to have additional cost involved in this particular timeline, and it is going to be affecting me. It is going to be putting a burden on my cost and reduce my margin. So adequacy of this is a critical business problem, is a business problem. Criticality, yes, it's a huge cost, and I have to look at it whether it is adequate or inadequate. So we have justified What is business analytics in this case? Why? We have justified it. Now, how? So what we did on this particular exercise, we actually adopted geomapping analytics. We adopted analytics on problems. Then we adopted a keyword analytics or a word analytics in this particular engagement to come out with this particular solution. According to me, in any business analytics engagement, if we have defined what is the problem that we are solving and what are the data inside it, we have solved 40% of the problem. The next 40-50% of the problem is on adopting the exercise, eliminating false positives, and providing the results to a client. So we'll come to that, what exercise we adopted. We identified that there are fewer taluks served by certain field engineers, and there are fewer devices that he has as spare device. This was our observation. So how do we decide that there were fewer taluks and fewer missions? So what we did here is, in a particular state, number of taluks that a field engineer is trying to solve, is trying to work on, is at 1.5, 1.4, and 1.3. That is, one field engineer is only looking at 1 or 1.5 taluk. One field engineer is only looking at 1 to 1.5 taluk in certain states. In certain other states, the ratio is at 3, 3.8, that is 4 or 3, which means that these 2 states I'm good and these 3 states I'm bad. So the next question is, the problems that is there in that particular fair shop is not in my hand. So is it justified to say that this particular states are bad and this certificate states are good? That is where we applied our keyword analytics to understand what kind of problems that come under every fair price shop. So there could be a problem on battery, there could be a problem on screen, there could be a problem on internet, there could be a problem on the device per se, whatever. So we run a keyword analytics and try to segregate this problem into problem level 1, problem level 2, problem level 3, where 1, 2, 3 is based on the severity. 1 is less severe, second is more severe, third is highly severe. So what we did is we segregated our problems, segregated the types of issues that comes from each of the shops into 1, 2, and 3. So if a taluk has 1 problem more, if the taluk has 2 problem more, if the taluk has third kind of problem more, it will determine the score for that particular taluk. So here we have used web analytics to understand the problems, keyword analytics to understand what kind of problems that is there in each of that. And then with that as a metrics, we developed a scorecard for each of these taluk, which is dynamic in nature. So as the problem increases or decreases, this particular item is dynamic. And with that, we found out there are fewer taluks served by certain field engineers, because the problem in certain of those taluks are actually very at one level where the problem is not that big, where a field engineer has to go there. With the spare device being there, this problem can be solved. And in certain cases, you don't have any choice. The problem is more because the device is older. You just replace the device, the problem can get solved by less. So we adopted an exercise to find how there are certain taluks, how there are certain problem with taluk, problem with mission, with the kind of problem that we are going to get. We also found out, let us say that a particular field engineer in a particular taluk, the nearby routes were not aligned well. This is a geo tracking based on our geo analysis, based on the routes that he has adopted, the GPS routes he has adopted. And with that, we find that, let us say there are 3 field engineers and the states that they are adopting. If you see that in item 1, the current scheme before we did this analytics was that 3 field engineers are into nearby areas. Just by realigning their routes, the routes, I mean here, the taluks and the fair price shots that they have to cover as a part of their responsibility, just by realigning, you can replace 2 in place of 3. You can replace 3 and put 2 in them. because the distance is going to be same or similar, and the differential is going to be at a very few levels. So it's around 44 minutes to 1.3 hours, that is around 15-20 minutes higher. Again, here it is going to be another 10 minutes higher. So what we found is that instead of having 3 field engineers to tackle this problem, if you have 2 field engineers, it will be enough. So this was done using a geo-analysis. Now we have found a problem. We have done an exercise in terms of using our tools and using the methodologies that are existingly available. And our recommendation is that we increase our spare device by 10 to 15%. And in those areas, reduce the field engineers and increase their scope per taluk, increase their number of taluk that they have to see, which will improve your reduction in overall cost and which will give you a saving. This was substantiated because we were there with them to understand whether this works for almost a year time. So what this tells us on business analytics is that first, we have solved what, we have taken why, and how. It is based on the existing tools that is available, certain techniques that is available in the analytics scheme of things, and we try to give a conclusion. The last part is very critical, that is storytelling. Here, what we are trying to say, then I am trying to put the entire topic using a couple of case studies, so it will create the emphasis that is required. So now the point is, if we are going to say this is not linked, if we are not going to put a story behind our output, such a way that it is linked to the management in terms of certain business plan change, certain operational changes, and benefits in terms of numbers, our analytics might not get into a position. So any business analytics should have an output of change in business processes or continuous monitoring that is required by the client, or to say you're good enough to go. So here, this is what we mean by way of this recommendation or this entire concept of what is the challenge, what was the exercise adopted, what was the recommendation that we are trying to give, is what I mean by way of storytelling. Why, how, what, and at last the deliverable or output. So the output is going to be, what is the question? The client didn't give us this question, so we have derived that question. Second, what answers are needed? The answer is that in these taluks, in these states, you reduce your field engineers and increase their scope. In those states, you change your number of devices from X to Y. You are having X number of devices, you have to change it to Y. And the answers are, you have to change your business operation in this manner. And how others have researched on this question, same question in the past, is the client have done some exercise in the past that is going to give us some data that is differential from our finding, because now we have used geo-based analytic tools, we have used web analytics, we have used keyword analytics. So all this have resulted in the similar way, or it resulted in a different way. If it has resulted in a different way, why our results are going to be separate? What analytic techniques or methods have we used and do we need? So this particular storytelling involves all this particular aspect to be conveyed to a client in such a way that he is in a position to understand, he is in a position to grasp everything of it and tries to appreciate on this particular output that we are trying to give. A storytelling board should contain the narrative of what is the problem, etc. What is the methodology that we have adopted? What is a discussion point? Say, in this particular exercise, there is a discussion point on, can we ensure that even by reducing the number of field engineers, can you reduce that 99% of the uptime? Can it be achieved? What is the risk that we are carrying on that? So this is a discussion point that we might have to put on, because any report, if it is not covering all the parameters and all the inputs there, it might not be an acceptable argument. So now we started to discuss on, okay, what are the discussion points with respect to the client, and how are we ensuring that this particular aspect is covered, this particular aspect is not covered, the discussion associated with our output. It could even be certain scenarios, like even if let us say that 75% of our recommendation is implemented, okay, or 50% of our recommendation is implemented, what could be the result? So the discussion involves certain bit more item that you want to load on the conclusion, but you don't want, because the conclusion, if it is loaded with too many things, it will not, it will be directionless. So those items that we bring it inside the discussion section. The last in part is the conclusion section, which says what is the item that you're concluding for your client. What is that you're going to say to a client? What do you want to do? You say, I think this is the best that is already there, and we might just have to continuously do what we've been doing, or we have to sit with the problem, or we are going to say to a client, you do this and this will be this change, or this will be what we will change from the problem. The third could be, there is no problem now, but you might have to monitor it on a monthly basis in your MIS system, or you have to build a dashboard associated with it. It could be any of these. So the conclusion becomes very critical, because that is what he's going to act upon. Last part is references. References is where you use public data as a yardstick. Let us say if we have done an analytics on another case study, this reference will be even bit more useful. So what is that is getting concluded in this whole exercise is that we start with a business problem. If it is defined, if it is undefined, we define it. Then we start digging deeper on understanding the client business processes and trying to ensure what it takes to solve this problem. Third is going to be on what kind of data questions or what kind of data is available, what is a business process that is followed. Then with the data, we try to apply our analytic skills in terms of using a tool to analyze it, in terms of a technique that we are going to adopt, and etc. Then come out with a conclusion which is going to be iterated among your team to know whether everything is being touched upon, whether there could be any false positive, whether there could be any false negatives, etc. Vet it out and then present it to a client. When we are presenting, we are going to build a story associated with it. There'll be a narrative, there'll be a discussion points, there'll be conclusions. This question is very important, because if the client expects some other question, or the business thinks of some other question, we might be very careful to know this is the question that we are trying to solve. So this is on the point. So now this particular exercise or the case study was to help us to understand on what business analytics can throws it out. And this particular exercise can be segregated into 4 categories. One are descriptive analytics, diagnostic analytics, predictive analytics, and perspective analytics. So descriptive analytics is based on past information, like what we did for this client. So it could be basis of a spreadsheet, or it could have a simple example, but even it could be based on your exorbitant tool on what happened in the past. So descriptive starts with an MIS statement and ends at anywhere in the globe. Diagnostic analytics is looking at a focused item on why did it happen. So in our exercise also, we started with the descriptive analytics and we had focused on a diagnostic analytics. Like now the description is that we have this much number of field engineers, this much number of taluks that they are catering. And for this taluk, which was lower, can we do something about it? Can we dig deeper to understand what is having a problem in this particular statement? Is this cost enough, bad, good, ugly? All that all that research that we're going to do is what we call it as diagnostic analytics. So we go to a particular item in a much more detailed manner, what we call it as diagnostic analytics. Predictive is the next step, where Walmart is predicting their inventory based on the season, the weather. Now, this prediction involves a good descriptive and diagnostic analytics output or a good database. Can we predict what would be something that we will lose? If I say, let us say a simple example of my receivables are at 100, and how much of my receivables will go bad? Okay. If the receivables of, say, my receivables are in this level, 100, and in a year, how much will this receivable increase to? And how much of it will go bad? So if I'm trying to predict my future, then we call it as predictive analysis. So what it would take, let us say that today the GDP is at this level, and today my sales is at this level. Today my customers are in these industries. So in the past, let us say for last 6 years, how was the GDP? And during that GDP time, how was my sale? During that particular scenario of last 5 years or 4 years, what was my customer bucketing? What kind of industries that each of these customers represent? What was my industry-wise sales and industry-wise receivable? And how was these industries in those 4-5 years? GDP of whole country or that particular industry's GDP value? That with that as a basis, I'm going to plug in a model. I'm going to try to understand. It could be even a regression question, or it could be a multivariate analytics, multivariate regression model. It could be any of that. Trying to understand, keeping in the past, this is how it has been. GDP, my customer segment, customer industry output, and my sales and my account receivable. These were in this particular way for last 4 years. And now with this, if I have to predict what would be the scenario of my accounts receivable, provided the GDP's country gets down by 10%, gets high by increase by 5%, my customer basis, the industries that I am serving is going to be changing in this proportion, how my accounts receivable is going to be. If we are trying to solve business problem, or we are trying to get business geared up for what it might come in the future, then that is what we call it as predictive analytics. But one word of caution on predictive analytics is it looks at the past and try to predict the future. So it is very important for us to understand and appreciate that the dynamic scenario of a business, how much it is brought inside the past model. So COVID, most of the business predictive models have undertaken a toss because the businesses didn't expect COVID as a particular scenario. So what a good predictive analytics, particularly a business analytics, which is working on the predictive models, has to undertake is, have we defined the dependencies well? Dependencies, I mean, how my output, let us say accounts receivable as a particular example. This account receivable as a dependent on sale, this account receivable as dependent on the industries that we target, this account receivable works on the economy as well. So if I'm going to predict my accounts receivable, then if I have dependency on 1, 2, 3, 4, 5, 6, 7, 8 variables, I call it variables, then we should define our variables or dependencies. At least we should have identified our dependencies to as much as possible, because any factor of dependency is not getting catered in, it might affect our predictability, number one. Second is, as variations happens on these dependencies significantly, we should rework on the model. Okay, so if the dependency is going to be different, then we might have to rework on the model. That is also something that we might have to be very cautioned about. So any predictive models are very dynamic. So it is not like descriptive or diagnostic. So a predictive model, a descriptive or diagnostic, let us say a report is 6 months old, it might be even a little bit more valuable, or 1 year old. Even today, it could be valuable provided the business scenario is not changed much. But a predictive analytics model that we have built on has to be checked for its relevance every now and then. The last part of it is perspective. Perspective is that using all the descriptive, diagnostic, and predictive result, how I am going to work upon. Because one myth that we have to understand is data analytics per se, even the business analytics per se, is not a magic pen. It helps us to give the direction that is required for business. So the business have to act upon that particular scenario to provide or to improve their businesses. So analytics per se would not give us an output. Analytics would give us the direction that is required in the business segment. So after we do that particular result, how am I going to act upon? So in our example, in the perspective analytics, so in the example when we presented that particular case study to our client, he was a little apprehensive. So he said, okay, I want 99% uptime. I don't want to have any problem in it. So you are saying you reduce by my field engineers to this ratio in these taluks, because we gave him a specific output, like how much missions have to be increased in this particular taluks or in particular states individually, in particular taluk level of a state, and how many field engineers you need. That's how many field engineers can be reduced. We said, first I'll start with implementing in few taluks at 30% or 40% of whatever you are saying. I will increase my machinery by 30% more in these taluks. I'll reduce my field engineers to 30% in these taluks. I'll do that first. And after I do that particular thing, and we'll see the output of it, and then we'll decide upon it. Okay, so he was having a perspective that among you options that you're giving, what is the best option that we are going to choose? So, and apart from that, even in the best option that we are giving him, he's going to work upon how much he wants to do and etc. This is what we call it as perspective. And he wants us to give us an output on, okay, I will implement your particular aspect at 30% of the result. I'll implement it at say 40%. Then what could be the result, and etc. So this is what we call it as perspective analytics. It uses descriptive, diagnostic, even sometimes predictive to understand what should be our course of action. So this predictability is still there at a very low end level, like trying to predict, okay, this is what the sale that you're telling, and this should be my inventory for that. This is something that is done earlier at industry companies level, but it is not as robust as it can be, because now if sales reduces to 10, what would happen to my inventory? Is it dynamic? Like those aspects are always questioned. So it's not as robust as it is envisaged to. So these are 4 kind of analytics. So we discussed what is a business problem. This business analytics has these 4 segments or 4 categories at which it works. So what data answers to? We saw a case study. So we will explain that case study in this particular way. What happened? So how many, how often, and where? So this is like you look at the past, say number of complaints that we got from the fair price shops. How many complaints we got? What is the lead time for us to solve that particular problem? How many problems did we solve? On a day, how many problems we get? How often we get the problems? All these questions on that particular human cost scenario of field engineers is what I call it as hindsight. So we had X number of people, we had this much number of problems, we had problems at this frequency, we had problems in this category. All that is what is hindsight. Now, hindsight might not directly help a client. It might help a client if he is going to work upon the hindsight by himself. So a particular dashboard, let us say an MIS statement. MIS statement gives the hindsight of it, what happened last month. So using the MIS statement, the management is going to decide the next month. They are going to help. They are going to work upon it for the next month. So that is what we call it as foresight. Use hindsight and help them out with and try to get out in the foresight. The insight is where what we discussed about increase. The problem is in certain places, the problem is because there is no good spare devices. The problem is here, the routes of the field engineers not properly aligned. So you could improve the routes, the number of field engineers or the coverages, what taluks of particular field engineers to cover. That particular item is not worked well. That is a problem. Second problem is not having enough spare devices. Third, we have not defined a scorecard depending on the problem that we're going to get. All these are problems. That is an insight. Then what actions are possible? So is this action possible in terms of, can we increase the number of machines? Can we reduce all this field engineers? All this that we work on analytics and provide them an insight, provide them an output is what I call it as insight. Then why it is happening? If you solve these two, the last part is explained by itself. Why a particular problem is happening? Is it because of X problem or Y problem? Or is it because of this business decision or that? The last is what if the trend continues? So what could happen next? This is where we try to come into a picture and try to put a break and say, okay, instead of doing it this way, can you do it this way? This is what was going to happen. This is what you can save. You could have saved and you can save from now on. So that is what we call it as foresight. So a business analytic, a business data problem will business analytic output should answer any of this or all of these questions. If it is a dashboard, it answers hindsight and it could give a insight as well. If it is a business analytic output, okay, a good presentation that covers entire of all of this, then it should have insight, it should have hindsight, it should have insight, and it should have foresight. Okay. Then what key takeaways that we can expect out of our analytics exercise? Let us say that understanding the data and how to use it. Okay. So key takeaways. Now, what it could be in terms of performance enhancement. It could be in terms of improving efficiencies. It could be in terms of monitoring. Generally, any business analytics engagement is going to give any of these three outputs. We are going to say things are now brilliant. This is what the best that a particular problem can do, but you have to still constantly monitor it. That is where this particular key takeaway is. It could be defining KPIs associated with it, building a dashboard associated with it, trying to put up certain bit more controls associated with it. A good example for that is that when we defined this particular client problem, then we decided that if a mission is there in a particular site in a fair price shop beyond 2.5 years, then it has to be changed, because a problem in this 2.5-year-old missions are significantly higher. You're putting too much of effort for them. Even if the useful life of the mission is around 3 years, is what estimated, it is better that we replace 2.5 years, because that particular amount of additional effort that a field engineer is going to put to solve this problem was higher. So now there was a control that is set inside the system where if from the date of installation, if a mission is going to be older to the tune of 2 to 2.5 years, then there will be a trigger that will come to the management. So automatically they can ensure that their procurement team can work upon it, their manufacturing team can work upon it, and their supply chain team can help them to install this particular mission there. So in this exercise, we developed certain monitoring aspects, like how many, on an every month basis, there'll be an output that is automatic. There is a dashboard telling the client on number of field engineers catering the states, number of field engineers catering these particular points, and etc. Okay. Then efficiencies. Efficiency is where the manning aspect, like how many people are needed. This output gave them this particular exercise. Decision making in terms of man versus mission. You're going to improve the number of missions and reduce the manpower. In certain states, you're going to improve both. In certain places, you are going to reduce both. So it depends on the output there. Then insights on revenue, how much this particular output can be. I mean, how much is the money that the client could save because of this, how much revenue he could make, all that. So generally, any analytics report, any business analytics exercise should throw all of this or any of this. It could provide insights, or it could provide takeaways on performance enhancements, or it could give a takeaway on efficiency management, or it could say, okay, from now on these items have to be continuously monitored. These are the KPIs that we are going to put on, and these items have to be continuously monitored. Okay, so this could be any of this. So why? It is because the rapid view of truth, because predominant of the business decisions were taken on a hunch, are not backed up by business data, are not backed up by the insight that it requires. So certain engagements, we believe that why someone has taken this number. Let us say that sales incentives is fixed at 5,000 per sale. Now you go back and ask a question to the activity business on why this 5,000 number. Is there any mind that is applied on it? Like it is 2% of your value, 3% of your value, 4% of value. Whether this 4% is something that you want your employees to be happy with. Why this particular percentage? Generally, it's not well thought about. In my experience at least. So the value of truth is significant, which means that now you provide these numbers and insights to them, even it can be in line with the hunches that the business has. So in one of our example, the business was of the opinion that this particular department was not performing great, and our output also through the same thing. Okay, so which means that both whatever we thought versus whatever the hunch that the client had was the same, or the hunch that the department had are the same. But in certain cases, the hunch was different. The client had a different, or the business head had a different hunch, and the throwing away was different. So it could result in any way. It could ensure that this was a differing opinion, or it could be a same opinion, whatever. So second is that it could be a command center where managers can drill down on details, because business is dynamic. Now there is a sudden change in the business problem, or sudden change in the way business operates. The managers can be swift in their action because of the data and the exercise that is involved in this. Third, it is going to be on, it can eliminate mundane report preparation. Okay, so there are certain reports that are going to be automatic and dashboard related. Like for example, in our case, as I told you, once a particular device is increasing to 2.5 years, this particular mission is going to be, has to be replaced. That trigger goes to the management by the system automatically. So now there is no report that is need to be prepared to know whether a particular device is installed from the date of manufacturing, how many days or how many months it went, because it is either it goes to a scenario where this machine, which is having an ID, is 2.5 years old or less than 2.5 years old. Simple. And these reports, what we call it as a specific aspect, that can be automated, and you don't need to work on those aspects, and you can work on digging down scenarios and improving on that. And the performance management can be linked automatically. So in our exercise, if you have solving more problems, or you are solving less problems, you are not there in a scenario where you are not having much of problem but still you're paid. All that can be sorted out. So what it takes in general is that it should improve the business and add value to the business. It could be in any of these variant. It could be on performance enhancement, or it could be on efficiencies, it could be on monitoring. And the most important aspect is that it can be as dynamic as businesses. That is what is very critical, because if a dashboard is installed, it could be anyway. It could be a dashboard, or it could be an exercise. It will ensure that the business is being catered. The dynamism of the business is well endured on. Okay, so if I have to do something like that, what is required? We have to understand data and how to use it, and we have to work on multiple sources of data. We have to handle data errors. We have to work out on providing a holistic picture where we process, analyze, try to work with the client to understand and improve sharing of information on real time. The last part, it is always an add-on. If the client wants it, or the data demands it, or the business problem is so unique, you might automate it using an AI engine. But what the business analytics per se requires is the first 5 steps. If I am going to do, this slide is on how data analytics or how business analytics is done. We have to understand the data. We have to what kind of data and how to use it. So the client has a particular data that is not being harnessed upon. Like in our example, there was a particular system by which the client was monitoring the problem. So there is a call center to which the fair price shop is going to give a call and say that my machine is not working. And that call center is going to record what problem they had. That's all. So now we use the data to ensure that categorize the problems that each of the shops is going to do. So how to use it becomes essential. Third is multiple sources of data. Here we use call center data, we used data from the human resource team. Here we used geographical data, we used keyword, everything. So collect data from multiple sources. And there could be errors in it. Like when you're using a keyword analytics, it is always possible that you have errors in terms of not, okay, you can always say it is this particular location, this particular mission is not good. and he can always say it is not bad. And now it involves us to understand, not wherever it comes, what is the next word associated with it, whether I have to interpret it in the same manner. So he could have given a call to say it is not a problem, but if you're going to just run keyword analytics without eliminating these errors or possible errors, then we might not give a good output. So handling data errors is very essential. And this is the hardest part on any engagement, because here we are going to work on multiple data sources, multiple data kinds, and user inputted data and all of that, and we are prone to errors. So in any report that we give, we generally say what is the percentage of errors that we have witnessed, so that our output could have dependency on it. Okay, so just to give you an example of another case study that we did, this is an example of a top to bottom approach, okay, where we had certain errors per se. So what happened in this particular client is, the client is into call center team. Okay. So the client had 8 members on the team, and we were trying to understand. The client wanted us to know. He felt that the call center team is not having enough work. The client had a hunch. So he said very simply, evaluate and tell me whether my call center team is adequately operating. Is my call center team has enough work or not? Simple point. Problem is, the business problem is defined. So the next question is going to be simple. What time, what output it takes? It is going to be the number of hours that these people are spending on call. The second he wanted to know is, he's using this call center team to call his various prospective clients. And sometimes the call will not get connected, the client would get unhappy, the client would not be interested. He wanted us to find out what is a non-ideal time to call a particular prospect. Can I call him today? Can I call him at 9:30? Can I call him at 11:30? Can I call him at 12:30? Can I call him at 7:30? What time I should not call? I should not call a customer at 9:45. I should not call a customer between 9 to 10. I want you to tell me that based on the past data. So this is again a descriptive and a diagnostic analytics. We've not predicted anything here. We are just going by the base past data and trying to understand this. But we had a huge sample here, which includes 5 years of call data. So 5 years across 8 executives. So it's huge data base. So the past would necessarily try to give us a indication of our future. So how many time is these executives spending on time? So here the problem was very simply defined as call center timeline. Then we try to define with that particular case on, started to get the data from the application where the call's made. It includes start time of the call, end time of the call. It includes number of hours, the number of minutes or seconds that they've spoken to each of the number, and how many times or how long they tried to make this call connected. So they were on this call, there were 8 rings that is going, so they were on a total timeline of this call around 20 seconds, and they spoke for 10 seconds. They spoke on 1 minute, they were called on 30 seconds, etc. So, and with that exercise adopted, we found that these are not original numbers. We just tried to find out that in a particular 6 months period, I have just kept the synopsis of the case study because I am forced not to give the numbers back. So here we found that in this particular scenario, his hunch was right, that the clients, the call executives are not having too much of workload. They are speaking on an average of 1 hour per day. This is only a representational result. It was found out that the call time versus non-call time was only 15% overall 85%. Going by the past estimate, it should be 70% to 70% call time and 25% non-call time, because the time that you try to connect and maybe you had a bad call, so there was a business requirement on it, like you have to take a break and make a call. All that was factored in, and it was 75 to 25, but the ratio was completely opposite, where you had 15% call time and 85% non-call time during the last few months. So what we did here, and we also did, this was on first result, this was on a second result, is that what is the proportion of calls that is getting connected to a customer? So we found out the bad time to call a customer is between 9 to 11. If you call any customer from 9 to 11, the ability to get connected to a customer is too low. Either you don't get connected, or even if you get connected, you don't speak well. So this 9 to 11 and the time between 4 to 5 was very bad. So except for a few exceptions here and there, this 9 to 11 is a very bad time, and 1 to 2 again is a very bad time. So we found that this particular call timings is not protective at all. So this improved the business segment, where they said instead of having a call time like this, between 11 to 1 we have call centers team operating, 2 to 4 call centers team operating, and 5 to 8 call centers team operating, so that my ability to reach the customers and my ability to serve the customers by way of call is improved. So there are two findings here. One, what we try to do is in terms of helping our client, in terms of finding out how efficient or effective his department is. Second, what time not to call a customer. Here, let us try to apply our business analytics model. What is our research question? Research question is, first question, are we speaking, are our call center executives speaking enough? Point one. Second question is that what time do they call? Do they have to have a return in the time period which they make a call? Second is that what answers are needed? We need to get two answers, which is you are calling on a wrong time or you're calling on a right time. What time is bad to call? That is the answer that is expected. Second, try to put a number to understand whether the call that is spoken, is it enough or not? So these are two things that we might have to provide as an outcome to the client. So is there any analysis that is done in the past? That's what I said, 75% to 25%. That is the industry benchmark. And the client confirmed to me saying that they are also in the same ratio. So, or the client forces said, at least I should be in this ratio, if not better. So we had counted in how this analytics or how this particular report has been answered in the past. And what analytics method that we are going to use. This is going to be a simple analytics, because while it involves a huge data that is getting involved, this particular exercise is not going to be simple, very difficult. It's going to be based on the timeline, that number of hours or number of minutes that a particular executive has spoken over a period of time, and based on the way that the call is getting connected to a customer. This is what it takes. So this output is very simple. And the next part is the narrative. The narrative is going to be that you are not speaking enough. The second, the methodology is how we have extracted the report from the system, how the data have been accumulated, and how many errors there were. So is there certain errors that is associated with the system? If they have called outside the system, what happens? All that comes under the narrative. The methodology is going to be based on what is the client data that I have relied upon, and how I've ensured that the data is not structurally wrong. While there are data errors, any business analytics engagement involves you to identify whether there is a basic data element entirely is wrong. Okay, so a good example for that would be, let us say I am doing a customer analytics, try to find out why a customer wants to buy from me or why a customer bought from me, and customer has told reasons and trying to analyze that. We found that 95% of the results was to one particular item, and other 5% was into some other item or some few items. Then we found the data itself is questionable, because in any point in time across customer segments where the population is diversified, he getting 95% to a single particular result is not generally that we can see. While we can argue that that could also be a scenario, but we said we are not relying upon this original base data, because it is completely skewed to one particular segment on one particular item. So what we did is, we will not use this data. We'll come back after a point in time. this exercise of getting reasons from the customer is going to anyway continue, and based on whatever it undertakes, we will analyze it in the another period after 3 months or 4 months time to understand whether the same results come or whether the results are better or different, because we want to check on how the data is captured, how the data is brought inside the system. So here the question is going to be, the narrative is going to tell whether there is any problem in the base data per se, whether it is completely throwable item. Methodology is what kind of analysis that we did. In certain cases, it could be simple arithmetics that we worked on a client. It need not be involving an ML model. It need not be involved a keyword in analytics concept. It could be a few arithmetic operations that we did on the client data. But it is very essential that we talk about the methodology. May not be saying that we did this, but it is very important that we discuss the methodology in the narrative in the client. The discussion is per se how certain variables are handled, how data errors are handled, and how what could be the other scenario, and etc. The conclusion is again what you want, what you expect the client to know. Here there are two outputs. So as I was telling you, the data results could be in any of these three, like hindsight, insight, and foresight. Here the impact was on two variants. One is we gave some hindsights to him, we gave some foresight to him, saying that we should maintain the 80-50% ratio. We should ensure that this is done. That is what we started telling him. So the point here is that this particular exercise is going to throw up a couple of more aspects on what we wanted the client to do. So it would include, here we did three things. One, we asked the client to say that this particular percentage of call ratio is not acceptable. The client wanted their call team to improve their ratio of calls. One. Second, there was a dashboard that is built in where this particular call time is getting monitored in. And by the way it is monitored in, if there is any call that is lesser than in a particular week or a particular month, if the number of calls is going to be below a threshold, because this involves huge number of employees, I have just reduced it because I cannot throw the client numbers. It was built in a model where if there is a red flag associated with the system among 500, 800,000 employees, it is going to throw up a red flag to the concerned process head saying that the number of call time that particular executive is on is very less. Then it also improved the process change in terms of bringing that particular into a KRA of that particular employee, that your critical requirement is that you should speak for key requirement is you should speak for this much number of calls in a day. You might be on call for this much number of minutes or hours in a particular day. So there was a dashboard, there was a red flag, and there was also a process change. Process change in terms of calling only between these stipulated hours, because the estimate of calls going bad in other time is significantly higher. So here there was a conclusion that we gave to a client in terms of ensuring that he is going to be useful for that. References, his old analytics report, said an industry benchmark on call center that we bought in, all that will be reference here. So what we're trying to do here is some of the tools that might be required, what we have used in the past is Google Analytics and RStudio, NIME, Power BI, Excel, whatever. So here this tool actually per se, according to me, business analytics should focus on, as we told, predominantly on the business problem and data input, while the application of it and working out on the data is also very important. If this is not going to get converted into an output or a meaningful result, how much of our this consumption and how much of our work that goes inside the engine will not get translated to the business, will not translated to a process owner, or if it is a client, if it's an outsider engagement, if it is an insider, it's going to be a department or business owner, whatever, it might not get translated. So what is very essential here that we might have to notice, because to just give you an example, here in this particular exercise that we did, which we converted itself into a dashboard on the first analytics problem that I was trying to show, we did more than what we presented to a client. in any case, like what we do in an engagement or what we do in a business analytics problem, whether it is going to be for an outsider or inside the organization. As a manager, if I do, I am going to work on more factors. I'm going to use more analysis using the tools that I have. But not everything is going to get converted itself into a business solution. So what is very essential that we might have to understand is, while the tools and the working of it is going to be important, we have to ensure that very good time is spent on the first few steps and the last step of storytelling, because this step, the importance of this step is already conveyed, because there are a lot of data scientists, data analysts, where people significantly work on this particular step, but significant emphasis is needed on first and the last, because then we are going to be working on data that might not use well. So now, what are the skill set a business data analyst need? Okay, if we are talking about all the other aspects, what is the set that is needed? Having made enough emphasis on the business knowledge, I will draw a particular line here on I will put everything under this bucket as secondary, and I would put first as business. So I need knowledge on analytical tools. I might have to know how I present it to a client, whether I have to present it in a form of a graph. I have to choose which graph it is. Say, to just give an insight, if the results are very not that divergent, let us say the difference between result one, we are going to present, say, how was the sales performance of 10 people, okay, or how was the sales performance of 10 products. And if those 10 products are having a very thin difference among each other, and presenting it in a form of a pie, where there are too many items involved in one particular ratio, would not be very significant. So I might have to be having an awareness on what kind of data visualization I'm going to use. Either it's going to be a pie chart or a normal graph, or it's going to be a surface graph. How I'm going to visualize the data to the client. So I might have to have knowledge about it. And the next is on a machine learning, where can I put an ML model to it? So I have done an analysis. What next? So is the client is going to be dependent on me to do this analysis every now and then? No, I'm going to build a model and give it to the client so that it runs itself and throws client result. So to do that, I need at least some basic statistical analysis, like what is probability, conditional probability, descriptive statistics, and certain items like that. Then testing skills. This is where, if we have an output, we test ourselves if the output is required, output is good, output is bad, to ensure whether whatever output we are seeing are okay with it. And data mining and data auditing. Data mining is a whole big gambit, and with respect to this problem, if we try to put it across, then it means that, are we getting data from enough sources? How the sources, how much data that we're going to get from each of these sources. Then data auditing is like what I said. Like, we throw up a data saying that it doesn't hold good. This particular data is skewed very badly, and I don't know whether the base data is right. That is what we call it as data auditing. Then knowledge about analytical tools, what I'm going to work upon. So I'm going to use R, I'm going to use even Excel, I'm going to use Power BI, whatever it is. So that particular knowledge is what is important. But having said all that, I'm going to put all this to and make business sense, or putting business first as the first and primary skill that is involved here, because this is a skill of an analyst. But when it comes to one step ahead, I'm going to put business analytics as on the topic. The sense of business, what we might have to undergo, what we might have to undertake, is that understanding what is the business problem all about. So that would be our primary and responsibility. So I think fairly we are in last 5 to 10, 15 minutes of the session. So I'll put down to questions. So the summary of all this is that we had a case study by which we'll try to explain the components of a business analytics in terms of what, why, how something is done. what kind of conclusions that we might get, and how this is, what kind of questions are we trying to answer to a client, and how it has to be put into a narrative or a storyboard, and how this entire things operate. So I'm open to questions. Thank you, friends. I'm open to questions.
Thank you, sir. We will now go ahead and take some time for questions. Just a reminder, please be sure to type your questions into the question box.
Any questions per se, friends? I'll just wait for. So, any questions per se, or
So I don't think we have any questions.
okay?
Venkat Prasad here. There's a question in YouTube. May I know how can we decide which tool should be used in each case?
Okay. Okay. So that particular item is something that it. I mean, I don't think so. I can give you a specific answer in terms of you use this as a tool across board, but it again comes to the question of, first, what is the tool that I am conversant about? That is the first thing, because predominantly, if you see all the data, the most widely prescribed data analytic tools, like you say open source tool like Naim or Metabase or Excel or Power BI, or even you say Google Analytics or Python, everything is actually having some of the basic features that are set in. Okay, so these basic features, even for that matter, ID or ACL, certain basic features are set in. So if you are trying to look at a numerical analysis and you use Naim or R, or you want to use Excel or Power BI, it's not going to make an ocean of difference. The ocean of difference is going to be based on the volume of the data. So Excel might not be in a position to handle a huge volume of the data. It might, but with having its own limitations. A Power BI tool or Naim or Metabase can handle a huge data, even ID or ACL for that matter. So first, it undertakes what is the volume of data that we are looking at. Second question is, the tool has a specialty per se. Okay, so there are certain tools that are computational tools. There are certain tools that are visualization tools. There are certain tools which undertakes both of these factors. Let us take Python. Python is a great computational language. If you're developing a script using Python, then it acts as both a visualization and a computational tool. But if you're talking about ACL or IDEA for that matter, it is actually a good computational tool. The visualization element of it is having its own aspect. If you take Tableau or Power BI, it is a great visualization tool, and it has its own computational ability. I don't deny that, where you can integrate Python scripts or R script to it. But what the factor that we have to design in is that, first, what is the volume of data that we are going to use? Second is, what kind of analytics am I doing here? Am I building a dashboard? Then Power BI or Tableau is the best thing. I am trying to prepare a presentation, what the client has to act upon, and for that I need to do certain analysis. Then you might have to use R or Python or even IDEA or Excel. So R has a lot of its own public library that is there inbuilt in it. So now the question that it would, the answer to that question would be, number one, volume. Second, what kind of data that I am working on. This is a string-based data. Then you have other own tools that use a lot of good. Say there are Python would be a very good web scrapper. So now if I'm going to take a lot of data from an outside network on a website, then I'm going to use Python more ideally than another tool. So first, volume. Second, what kind of data that I am looking at. Third is nature of output that I want. If you want an output in the dashboard per se itself, you use Power BI or Tableau much better. And if you want it to add certain elements to it, like build a whole report based on that, then I would suggest you use those computational tools and bring that output in a form of table charts, either in your same tool and bring it over to a PowerPoint or whatever tools you're using to present, or you can go back to your Excel where you get an output of that particular exercise in a form of an Excel spreadsheet and then provide to a client as an output. So I can tell you the factors by which you will decide. One is volume. Second is the nature of data that we are going to analyze. Anything there?
Thank you, sir.
Thanks, Venkat. It was a very elaborate and interesting answer, stating that there is no straightforward answer for it. Depends on few factors which needs to be taken into account.
Correct.
Yeah, one more question has come from Mr. Ashit on the YouTube. That again, I think it's a related questions which might elicit a similar answer. Which type of chart graph to use?
Okay. See, this what chart to use itself is a separate topic. Okay, and I think Excel also has a particular webinar on it or session on it. I was at. Now, in any particular, first thing that I would state as a generic principle is who is your audience? Decide that first. If you're going to present a report to a management, okay, and they are going to be acting upon that, I have seen in my personal cases that the board is not going to be impressed by a variety of charts that we are going to produce, but a simple tabled information with which they can act upon. Okay, so you can provide varied graphs in terms of pie, donut, a line chart, a pie chart, or a stack diagram, whatever. But the client is going to work or going to act upon that, he has to be comfortable with that chart. So that is the first and primary thing. So before you decide what kind of chart to use, you should first take it, okay, is this client going to be comfortable with this chart? Is this chart explaining the content for itself to a client? So in our example that we saw, we made that chart into a form of a donut because there are only two items in it, spoken, not spoken. There a pie, there a donut or a pie would be good rather than a line graph or a bar graph. So there the content involves one or two. So here we use this as a case. If I have 5 items and I'm going to explain those 5 items, and depending on the results of these 5 items, I'll decide either a bar graph or a area, surface area or area chart, or I'm going to use a pie or a donut. So the first question is, you have to ask yourself, will the client be comfortable viewing this chart? While there are certain basics like what I said on whether you're going to use a donut or a bar, depend on how many results you're going to have. Having said that, first ensure that a report, according to me and whatever is my small experience in presenting reports, I find that more than the way that report graphs are structured, it is what they understand out of the report box this makes a particular business analytic report hit. So I would say first discuss with understand the client based on the discussion that you have in what he is impressed about and all these things, and use that as a benchmark to decide your charts and your report structure and report format. Sometimes appointed numbers that you give to a client on this number is what it takes, and a narrative about this number saying this is bad, good, and ugly according to your own opinion would have a huge impact than presenting that as a chart without any narrative. So it throws the question of it answers like what does the client would want, what kind of data that you are throwing in front of the client. These two will decide what kind of charts you will use, with some basic ideas like avoid pie chart if there are too many items involved in it, because the pie becomes very confusing, and certain elements like if there are only 2 items, avoid a bar graph or this. and if there are no numbers involved, there is no histogram. Like that, there are certain basic involved in it. But having with that basics, you decide based on your client, who's your target audiences. Based on that, you decide the chapter.
Thanks, Venkat. Absolutely well explained. And there's one more question, which is more on asking about how is data analytics different from business analytics? This is from Shreya Mohan.
Okay, so I would call business analytics as a subset of data analytics. Okay, because data analytics is even more a bigger problem, even more a bigger item. Business analytics involves a subset of data analytics where it applies the data analytics concepts, but it is trying to only use a business, is trying to solve a business problem. Well, I'm not saying data doesn't solve a business problem. I'm saying any data analytics exercise that is going to solve a business problem is what is a business analytics. So it's a subset of it with a clearer objective of what we're solving. Let us try to put a very simple example of you would have seen Obama's picture that is getting lined up now, a video that is created by AI having Obama speak. Okay. Now, is that particular item exciting? Answer is yes. But is that a business want? Answer is no. At least this particular business might not. So if I am going to solve a business problem, or I'm going to give a direction to a business using my own data analytics skills, that is what I call it as business analytics. So the distinction is that what is your objective? If your objective is solving a business problem using data analytics, it is business analytics. So any other question?
Thanks, Venkat. This is what we see in the YouTube right now. Linda, over to you.
Okay, so I just take another few minutes just to throw up another, it's not a case study per se, but it is on the report narrative or the storytelling point. So in this particular analytics report, what we did is we throwed up a background, okay, on what is our scoping, the storytelling, then we bring in what are our information sources. We have built a narrative as a preface on what is happening at the business scenario. Then we first presented to a client what are our key observations. So what happens to a client on this particular, what is the our findings all about? This is summary of observations. Then we dwelt in detail at each of this observation. So at this number of 84% what it is, as number of 63% what it is, all that we did detailed, and at the end of it, we try to summarize what the client wanted into 2 questions. The last part is the conclusion that I'm talking about is what is here. Now, what you want the client to do based on your observation. So this is the scenario that we're going to talk about. So you want him to change certain things that he does. You want him to monitor certain things that he does more, or you want him to stop doing something that he's doing. So this is what a business analytics exercise should tell a client or to tell a business. So we provided a way forward to the client. So the report structure is going to be on the narrative, output, and discussion. These are discussion points that we had. What would happen this, what would happen that, and things like that. So a discussion point, and the last on the way forward. Okay, so we'll wait for any more questions, or we'll take leave. Any more questions?
No, sir, I think we are done with the questions.
Okay.
Thank you, sir. That was indeed an informative session. And on behalf of Excel and Excel, I thank you for taking time and sharing your wisdom. I would also like to extend our thanks to all the participants for your time and support. We appreciate you being here. Hope this session was useful. An announcement for all regarding our upcoming sessions. On 11th September, we have a session on data visualization in MS Excel, tips and tricks by Jordan Goldmere, Microsoft Excel MVP, founder and COO at Excel.tv. On 18th September, we have a session on 10 common DAX formulas in Power BI by Chandip Chabra, founder at goodly.co.in. On 25th September, we have a session on HR analytics using Power BI by S. Vanukumar, founder and director of ARRA Associates. And on 3rd October, we have a session on creating income statement P&L using Power BI by Mark Walter, Business Analytics Manager and Power BI blogger at storybi.com. Thanks again for joining us today, and we will see you in our next session. Do not forget to like the video, and for more updates, subscribe to our channel. To know more on EIE Fresh Talk, use the link in the description box. Stay tuned for more Fresh Talk. Have a happy weekend, and thank you all.
Thank you.